This is the storyteller with another hot topic. FSBOs, for sale by owner. Many of you property owners have taken matters into your own hands because you don't want to pay all those high points to the realtor to help you sell your home. 6 points is what they're charging. And sometimes they walk away with anywhere from $12,000 and above of your money. You want to keep that money in your pocket. But you have so many investors now, people beating your doors down and calls offering you all different types of lines to get in your home. You've got all kinds of offers coming in. Owner finance. Will you owner finance? Will you lease to purchase? Will you take a certain percentage down and allow us to pay off the rest? Can we assume your mortgage? You don't want to get involved with any of that. All you want to do is sell your home and walk away because you want to be done with it. We simply want to move into our new venture. Whether we're upgrading or downgrading, is our home, it's our prerogative. If we want to move into an apartment or condo, it's our business what we want. But have you had the opportunity to have someone coming to you wanting to assume your mortgage? Say your mortgage is assumable, that is. Not many mortgages are assumable, but if you own your home and you owe anything on that home, you still are carrying a mortgage. And say you owe your home is worth, let's say, $400,000 and you only owe $200,000 on that home. And then you have someone come to you, an investor, and says, hey, how about we assume your mortgage and then pay you the difference in cash to meet that $400,000. Now remember that you're only going to get what you've paid off of that $400,000. But I mean, being realistic, if you have a $400,000 mortgage and you paid it down to $200,000, that's quite a bit to assume and then bring to the table on your behalf, the balance. I'm saying that, say you have a $234,000 mortgage and you only owe $229,000, you're only going to get $4,000. So they're getting a better deal than you are. Put it that way. Be careful with assumptions. That's all I'm saying. That's kind of tempting, but you got to really be careful because we've had some people that have had their homes snatched right from underneath them. So you have to be very careful when someone mentions transferring or assuming your mortgage. Most of these investors are depending on the stupidity of the homeowner. So they'll draw up these proposals. They're not even sure if your mortgage is assumable or not, but they will draw up these proposals and then try to get you to sign, agreeing to their terms and conditions. Well, guess what? Now they have our signature. So don't do anything without a notary present, without proper advice from an attorney or a compliance officer or a realtor or someone that you trust that holds the knowledge that they think you don't have. Because there are certain types of mortgages that just simply cannot be assumed. The main types of mortgages that can be assumed are FHA loans, VA loans, and USDA loans. And don't get me wrong, there's nothing wrong with loan assumption as long as it's done right, decently, and in order. Most people that are doing them want it for the rate, but a lot of times they don't have the homeowner's best interest in mind. For FHA assumable mortgages, you'll need to meet certain standards, FHA loan requirements. These include being able to make a minimum down payment of 3.5% with a credit score of at least 580. So they still have to qualify. Don't sign anything. VA loans, you don't necessarily have to be a member of the military or a veteran to assume a VA loan, but the lender will still evaluate your credit worthiness as a borrower. While there isn't a minimum credit score, the lender will typically look for a score of 620 and above. You'll also still have to pay the VA funding fee. USDA loans are most often assumed with a new rate and term, but in some cases, like transfers between families, it can be assumed with the same rate and terms without needing to meet eligibility requirements. To assume a USDA loan, you typically need a minimum credit score of 620. You also have to meet income limits and location requirements. When you assume a mortgage from a home seller, you become responsible for that loan at its existing interest rate and terms. The seller signs the balance over to you, while you compensate them for the amount they already paid off. You can only assume a government-backed loan, such as an FHA or VA loan. Most conventional mortgages aren't assumable. Some borrowers seek out assumable mortgages in order to get a better interest rate than what's on the market today. An assumable loan can be tough to find. However, the process of assuming a mortgage, when you assume a mortgage from a home seller, you become responsible for that loan at its existing interest rate and term. The seller signs the balance over to you while you compensate them for the amount they've already paid off. You can only assume a government-backed loan, such as, again, FHA or VA loan. The lender of the original mortgage must approve the mortgage assumption before the deal can be signed off on by either parties. The homeowner or the home buyer must apply for the assumable loan and meet the lender's requirements, such as having sufficient assets and being credit worthy. When you complete the refinance with a new lender, the new loan server will create a new escrow account for you. With that, your original escrow account will be closed. If the original escrow account is closed, you should receive a check for the remaining balance within 21 days. Never sign any paperwork or take any form of payment from an investor or buyer. Don't do anything without representation. Hire a mortgage attorney. Fees are around $1,200. It's worth every dime. Get your lender involved if you have one, and your bank. Never do anything with their bank alone. Allow your bank to work with their bank directly. In other words, have their people call your people. If you own outright, man your property. You are a prime candidate for scammers to come after you, especially if you are doing a FSBO for sell by owner. Remember, you are the seller. The buyer must have their stuff in order, like a pre-approval letter or letter of statement for those buyers that are paying cash. How to show proof of funds for cash offer. You need to request a proof of funds letter from your bank or financial institution. Most of the time, banks can provide these letters in 1 or 2 business days. It's a good idea to give them a few extra days so you can have the letter when you need it. What is acceptable? Proof of funds. Common types of proof of funds documents include bank statements, investment account statements, balance certifications, balance certificates issued by financial institutions, and letters from financial institutions confirming the availability of funds. Do you need a contract? The most common residential offer from North Carolina is the offer to purchase and contract, form number 2T. It is not out of the ordinary for you to request proof of documentation because, after all, you don't want to lose your home, and you got so many scammers out here. Many standard forms also are available to add provisions of special importance to the parties. What type of contracts is an offer to purchase a home? An offer is a written proposal to buy a property with conditions baked in. The buyer agent helps to write it up and deliver it to the seller agent. And if you're for sale by owner, then you are the acting agent. Purchase agreements are an actual agreement between the buyer and the seller, also sometimes called a real estate contract. But if you are the one that is selling and you're doing a FSBO, then again, you are that agent. So they ask for the paperwork. It's nothing out of the ordinary for you to ask for it too. This is why an attorney is needed. I advise you to get an attorney if you don't have one. Please do not accept cash or down payments, money in an envelope or suitcase. The bank does not like dirty money. You don't know where the money came from. And you have to be able to account for where those funds came from. Better to account, okay, listen, to account bank to bank, attorney to attorney, agent to agent, working for buyer to seller, and seller to buyer. Everyone covered. Thus keeping down the parasites and claim jumpers in 2024. Oh, they're out there. Don't fall for the okie doke. Don't fall prey. All they need is your signature. Sign nothing on the fly. Don't make any knee-jerk decisions, no matter how good it sounds. Don't do anything without an attorney. And make sure that you do everything in front of the notary at your bank, a true notary. Okay, this is a true story. And this just happened this year, 2024, but I know that there's a lot more before this woman here. An elderly Florida woman claims she lost her home, her family house, after a neighbor convinced her to sign a blank piece of paper giving him the rights to the property. Now, this man had been watching her for a very, very long time. They had sights set on her. Susan Edmond, 80 years old, was interviewed by Fox News about the incident. The accident began when Mark Oliver, her neighbor, showed up on her doorstep and asked her to sign a plain piece of paper in April. Had never seen him before, but he told her he was a neighbor next to her sister, Jackie White Edmond, who lives in the Tampa Bay area, said the property has been in their family for many, many years, and it is left to Jack to live there as long as she lives because she's not very competent to see after herself. Okay. Oliver owns a farm next to the house and already got permission from White to put some of his animals on the property, according to the reporters. Now, the 80-year-old woman declined his offer and went to Cracker Barrel to eat. Okay, and this was all on the same day, to attend a birthday celebration. And that's when Oliver and a woman he claimed to be his banker reportedly confronted the lady in the restaurant. Okay. Elderly people are a target. For sell by owners, we are targets. Edmond alleges Oliver was loud and obnoxious inside the business while demanding she sign the blank paper. Eventually, she relented and gave her signature. Reporters said that signature ended up on a quick claim deed, giving Oliver ownership of the 3+ acre property and family house worth over $260,000. Now, Edmond filed a lawsuit against him in May. Well, she says, we'll do whatever we have to do to get it back. The 80-year-old woman told this to the reporters. My parents paid for that property, and they wanted it back. They wanted it to be Jackie's. Oliver responded to the lawsuit saying, the deed is not fraudulent and was not signed under duress or fraudulent terms. This is what the scammer claimed. Now, the Hillsborough County Sheriff's Office initially investigated the incident and turned the case over to the state's attorney's office. Officials said no charges have been filed against that man, Oliver. In the meantime, the woman had to abandon her property. They only need a signature. They only need a signature. The main types of mortgages that can be assumed are FHA loans, VA loans, and USDA loans. Please be very, very careful with who you do business with. They are out there. Do not sign anything. Make sure that you have a compliance officer, an attorney, or someone, an expert. This is why now you see a lot of for sale by owner signs in their yard saying for sale. Owner gave up, hired an agent. This is the storyteller with another hot tip. Don't fall for anything. Don't sign anything and pray about everything. Until next time, God bless you selling your property. Bye.